Hi guys, this is KP from InvestorWise. Hope all of you are doing good and staying safe in this lockdown. Uh, last 1 month has been very volatile in equity markets, but overall markets have been on a bull phase, and I think this is for the first time that even when the markets are bullish, people are enjoying it. Investors are enjoying it because they made good returns in this point of time. Obviously, if they have taken long positions, and I think more than enjoying the fact that markets have revived and recovered so much, people are more bothered about the reason why these upswings are happening in the market. So, this video which I am making here will be covering it in three parts. First part of my discussion is what possibly can be the reasons why the market has shown this drastic upside. That's number one. Second is, will this sustain? That is very important because we can't just go in the flow and you decide, okay, from Monday onwards, I'll buy possibly the shares of all the companies. It's not like that. I'll be covering the reasons why I feel maybe this will not sustain. And third is my recommendations on how you can approach the next 1 month or so in the market. So we start with the first point of discussion, that is why did market show this upside? To be very precise, on 24th of March, Nifty 50 index was trading at its all-time low of all-time low means the last 52 weeks low of 7511. That 7511 mark was touched on 24th of March, and from there, yesterday's closing was 9860, which means there is an upside of 31%, which we have seen in last 1 month. That 31% upside, when we feel we are going through the toughest phase of our life, how is this even remotely possible? That is a $1,000,000 question. I'm giving you 10 reasons for why I feel this upside would have probably happened. Let me start with the first point. The first point is, I hope you know about it, the antiviral drug, which has been tested in US. The drug has been developed by a company called Gilead Company. This is a company which is basically developing one drug that is called as remdesivir. I hope I'm pronouncing it correct. Remdesivir is the drug which they tried on patients who are having acute suffering from coronavirus, and the results have been positive, as in recovery has been seen to be 31% faster in the patients who have been put on this drug. Now, this drug is still in the third stage of trial, and FDA is yet to give it a final go. But as of now, this drug seems to be giving a good result, and that was one reason why we feel that we are close to developing a vaccine for coronavirus, and maybe that can happen. I'll speak more on this later on. The second reason is the Fed, the US Federal Reserve. Just like we have RBI in India, I've explained this earlier also. The Fed Reserve in US, they are giving a kind of booster to the economy by keeping their interest rates close to zero, and they are funding the banks right now to help us revive the economy, to help businesses survive. And in the recent meeting, the Fed has not given any indication or hints about increasing the interest rates, which means they are going to continue with this 0% interest rate at this point of time, which is another booster for the US economy. The third reason is the Chinese factory data was out yesterday, and for both March and April month, they have shown an upside, as in their consumption, their production has been on an upside, and they are exhausting their inventory now, which is actually a good sign if you see from industry perspective. So, and they are anticipating that going forward in the months of May and June, the industry output and the consumption will be better. Fourth reason is, obviously yesterday was F&O expiry. There has been a lot of short built up because obviously people were bearish on the markets, and a lot of short positions have been developed, which yesterday, because of expiry, people had to either square off their positions or roll over, and this has also resulted in the stock markets going up. Point number 5 is, yesterday, the global markets, some of them, like the Australia index was up by 1.4%. The Shanghai index was also up by 1%. Hong Kong markets were closed yesterday, and Dow Jones and all did not do that well, but then Dow Jones has recovered a lot in the last 1 week, and the impact of that probably has come in late into our market. Last week also, Indian markets were like it was more like a topsy-turvy kind of a ride, where some days we had upside, some days we had downside, some days market opened very high but could not sustain the levels. But yesterday we have seen a full throttle upside in the market. Not just yesterday, I think in the last couple of days we can say. Point number 6 is India's lockdown phase 2, which is ending on 3rd of May. The plans are that beyond 3rd of May, they will allow the plants to operate. Like for auto sector, they are planning that they will operate the plants. Yes, it will not be full-fledged. They will allow only to operate at 50% capacity. Not all the laborers will be allowed to work. We are not even sure if all the laborers will be working, they are available or not, because a lot of people would have moved back to their native places. So we don't know about it, but there are contemplations that maybe the plants will become operative. Agricultural production has already started. So companies which are involved in agricultural products, they have already started their operations. But as far as other industries are concerned, the government is into the contemplation phase, where they might give them an opportunity to start their operations. Maybe not full-fledgedly, like I said, but maybe at 50% capacity they will start operating now. That is point number 6, guys. Point number 7 is, I've always said this, that when you look at the index and you try to figure out the upside or downside in the market, you need to understand the index does not represent all the stocks trading in the market listed on this exchange. It is primarily, the Sensex is made up of 30 stocks, Nifty is made up of 50 stocks, and how these stocks will impact the index will depend on the market capitalization of stocks. And that is where the role of heavyweight stocks like Reliance, TCS, the Bajaj stocks, the HDFCs, these stocks will come into the picture. And only for yesterday's data, if I tell you, Reliance was trading at 1495, as against a low of 875, which was hit in the last week itself, last month itself. Next, HDFC Bank was trading at 1,000 rupees yesterday, which is a recovery from a low of 738. HDFC Limited was trading at 1916, which has shown a downside of 1473. If you see why I'm specifying these values, is you can understand how much recovery these particular stocks have shown, which goes on to show that these stocks had a huge impact on index going up. That does not mean that all the stocks on the exchange are doing well, but probably these stocks have a great impact on overall index going up. Next is TCS. TCS has registered a downside value of 1506 in this last couple of months, and now it is trading above 2000 mark. And same goes with Bajaj Finserv. I know this is a popular script, most of us know about it. Was trading at 4100 just a couple of weeks back, and yesterday's closing was above 5100. So these are some of the heavyweight stocks with a huge market capitalization, and these stocks trading up will automatically push the index up. So generally, as a trader or an investor, we have a tendency to look at these indices where we try to understand if markets are doing well or not, just by looking at the index value, whether it is green or red in color. But then we need to understand there are some stocks which control most of the movement in this index, and these are some of the stocks which I have spoken about just now. They had a great impact. Further, even if you see, the pharma sector has done pretty well in India. One particular reason for that is this particular hydroxychloroquine drug, which was earlier exported to many countries, including US. And a few weeks back, they were anticipating that this can turn out to be a good drug. Basically, it's a malaria medicine, but it was showing some good signals when the same medicine was given to the patients of COVID-19, and some sense of recovery was seen over there. But again, because of this, some of the stocks like Biocon, Dr. Reddy, if you look at these stocks, they are trading at their 52-week high at this point of time. Dr. Reddy is close to 4,000 mark, whereas just last month it was trading 2,800 rupees. So you can understand these are also the stocks which have influenced the index upside. That is, Nifty has gone up by 30%. They also have contributed in that. Okay, apart from that, this is point number 8. Yesterday, FDI have invested close to 1970 crores, 1970 crores in the Indian equity market, and domestic institutional investors have invested close to 580 crores. That obviously will again boost the markets, and because this is another reason why the markets were up yesterday. Point number 9 is again coming back to Reliance. Reliance has a great impact on the markets. Reliance and Facebook deal has given a great boost to Reliance. If you see in the class also, and so many times I have told this, Reliance is sitting on huge debt. Okay, Geo business is doing good, so they are able to tackle their debt, but it's a double-edged sword, and they are sitting on a total debt of 2 lakh crore plus. And the idea is to now pay off this debt, where this deal with Facebook, which was 40,000 crores plus, is a big booster. They can use this money to pay off their debt. Plus, this right issue which they are bringing in, that will be worth 53,000 crores, and it has already been given an approval. And if this deal plus this right issue together is going to help Reliance pay off their 1 lakh crore of debt. I hope you know about this. The talks are going on with Aramco. This company is a Saudi company which is planning to buy stake in Reliance, and they will be taking a stake of close to 20%, which is worth again 114,000 crores, which means 1,14,000 crores. Keeping all this in mind, Reliance is making bold statements that this entire 2 lakh crore plus what they get, they will be using this money for paying off their debt, which makes a company like Reliance debt free. And then the kind of freaking business they are doing in Geo, this is only going to add a booster to its stock story. The stock is expected to show more upside based on that. So this deal was supposed to be closed by 30th of this month, 30th of April, I guess. But as of now, the due diligence is going on, and they are very hopeful. Mukesh Ambani is very hopeful that this deal will go through. So this is point number 9, guys. And point number 10 is the kind of stimulus which RBI is giving, where they have given to microfinance companies and NBFCs. They have given them a total booster of 50,000 crores. 50,000 crores has been introduced, which is basically for creating liquidity in the business. Plus, they have introduced another 40 to 50,000 crores, which will be used by NABARD and Housing Finance Corporation for offering the liquidity to regional banks, regional rural banks, and tier 3 states. The banking services over there, they will be getting a booster. So close to 1 lakh crore of stimulus has been created by RBI just to increase liquidity in the market. These are 10 reasons why I feel, taking them collectively, you can understand why overall we see a healthy picture and markets have done well, even when we are going through extreme circumstances where overall, if you see, things are not that great, and still markets have done really good in last 1 month, which we actually anticipated markets won't do great, but then we expected that it will be a topsy-turvy ride where stocks may do good, and then again there will be some corrections in the stocks. But then overall, standing here and talking about last 1 month or so, looks like a very healthy picture. And people who have invested in last 1 month, keeping their heads stable, they would have made some good returns in this market. Okay. Now the question is, will this sustain? Honestly speaking, this may not sustain with one side movement in the market. Like markets are not going to give an upside on a daily basis from here, I feel, and I have certain reasons for that. The first reason is, if you see, US has put restrictions on the immigration. We can't ignore this fact. Our IT business and pharma business is heavily dependent on exports to USA, Europe, and some other European countries. With immigration restrictions coming in, definitely the businesses of IT sector companies like Wipro, TCS, Infosys is going to get impacted. We can't rule this out, and this has already been shown in the overall guidance given by companies like Wipro and TCS, where they have made it very clear that they won't be able to give a guidance about how their next couple of quarters is going to be, because it will be dependent on large number of factors. Business getting interrupted in these locations is definitely going to bring down their overall profitability, and that will show an impact on the share prices as well. As far as the point number 2 is concerned, Fitch has given a GDP growth rate for India. They started from 3%, then they came down to 1.2 something, then 0.8, and now they have gone down to a crazy value of 0.2%, where they say they don't see India's GDP for this coming fiscal year to be more than 0.2%. On the other hand, International Monetary Fund has anticipated India's GDP growth rate at 1.9%. World Bank is anticipating something between 1.5 to 2.8%. CRISIL is anticipating 1.8%. So the actual GDP numbers, which were before the outbreak of coronavirus, which was anticipated for India, was 5.6%, and that 5.6% is very healthy. But when we compare this 5.6% with what now we are anticipating, we can clearly understand next 1 year is going to be full of hiccups for the Indian industry as a whole. S&P and Fitch have also downgraded India's rating to BBB minus based on what they understand the outlook of next 1 year. But again, the good news here is that they are anticipating that 21-22, that is next year, if we see, they are still hopeful that next year we might have a GDP above 6%, which is a positive sign. But as far as this particular year is concerned, we are anticipating some hiccups in the operations, and GDP might suffer, which will also result in the fiscal deficit for the government going up, which is again not a great news, because that affects the health of the economy as a whole. Point number 3 is I have always told this to you, that what makes the share markets very dynamic is that the share prices get influenced by 2 big factors. One of them is how companies are giving guidance about their future, that is next 3 to 6 months, and how the quarterly results are going to be. Obviously, guidance is one thing. Based on guidance given, if guidance is weak, guidance is poor, shares will be going for a toss. Plus, if the quarterly results are not great, then again we anticipate that the share prices may suffer because of that. As far as these 2 things are concerned, the main quarter which I feel will be impacted is the April to June quarter, where we don't anticipate a lot of operations taking place. Even if it starts, it will not be full-fledged, as I told you already. So we anticipate that for April to June quarter, most of these companies are not going to post very attractive results, which will surely have an impact on the share prices. Yeah, some businesses will do good. Like if you talk about pharma sector, agricultural sector, they might be doing better when compared to other sectors like IT sector or companies involved in steel manufacturing and all. Point number 4. Okay, so continuing with this point, if you see, already for March, the results have come for a few companies, and although January to March period was not that much impacted by the corona epidemic, still there are some companies which have not come up with very attractive results. Like if we talk about HUL, we talk about Hexaware, we talk about Tech Mahindra, the results have been on the lower side when we make a comparison on year-on-year basis, which is again signaling that if March results were not good, then probably we are heading for a further downfall in the results as far as April to June quarter is concerned, which is going to be first quarter of 2021. Reliance results, guys, if you would have seen yesterday, the results for Reliance, as far as the Jio business is concerned, they have done very good. They have shown an upside of 177% with the profits of, I think, 2,300 crores plus, which is good. But overall, if you see Reliance business, with the petroleum business has suffered adversely, and as a result of that, they have taken some drastic steps, where from April onwards, Mr. Ambani will not be taking his compensation plus the compensations even for employees with salaries greater than 15 lakhs have been cut from 10% to 50%, because they have told it very clearly that they are going to cut down on their operational cost, which includes the salary payable to the employees. Obviously, they won't lay off employees. That's a good news. But then salary cuts will happen, which clearly indicates that company is facing some pressure as far as their petrochemical business is concerned. Next is point number 4 is this Remdesivir, the drug which has been developed. Obviously, this drug is in the 3rd stage of trial, and maybe it will also get FDA approval, and maybe it can work out to do wonders in health recovery for a lot of patients. But then we need to understand that this does not bring an end to the pandemic that is COVID-19. It does not bring an end to it, because as long as we don't have a vaccine, we are not very sure if the situation and circumstances are going to improve worldwide, this will have an adverse impact on the economy. Yes, it's a positive news. We should see the light at the end of the tunnel. But then there is a difference between a drug for temporary help of the patients and having a vaccine which will eradicate the disease altogether. These are two different things. Point number 5 is if you see this, especially for Indian markets, as one RTI was submitted to Reserve Bank of India, in which they have replied back saying that for up till September 19, there have been 68,000 crores worth of willful defaults that have happened on the loans from the corporates. And this is not again a very good sign, because if till September 19 itself we have 68,000 crores of willful defaults on the loans, then you can understand that going forward, we can only anticipate that more and more CDRs, corporate debt restructurings are going to take place, which will again put some pressure on the banking sector, where their NPAs are going to go up. And in that case, obviously, they have to make more provisionings, and that will also impact their profitability. And the stock prices are also expected to suffer in that case. Apart from that, we have some other factors, not very important, but yes, we need to consider them. Today, Indian markets are closed, but as far as the SGX Nifty is concerned or the Dow Jones is concerned, these are low. These are trading low. So we don't know if there is a trend reversal again and the markets are going to go into the bearish phase again. And if that happens, then obviously the Indian stocks will also suffer to some extent because of that. Next is Mr. Trump. He's again, yesterday only, has given a warning to China that for him, it is a bio weapon developed by China. And again, he's saying that the best way to reply back to Chinese government is by increasing tariff on goods. And if he is going into all these strategies and policies, then this will again have a bad impact, because again they will enter into a trade war kind of a situation, and then again this is going to create an impact on the markets as a whole. And next point is the GST collections for March this year was close to 28,000 crores as against the last year, where the collection was close to 110,000 crores. So there is the GST collections have come down by almost like 80%. Don't go by the exact figures, but this is roughly the figures which I remember. 28,000 crores is the collection of GST for this March. For obvious reasons, we understand that. But last year, the same time, the collections were 113,000 crores. So this is going to affect the government to a large extent. Now, so when we look at these two things, we understand why markets have why markets have done well in the last 1 month. There are a lot of factors for that, and at the same time there are reasons why we can't become frivolous in our investments, and every step you take has to be taken with caution. You can't recklessly put money in any of these stocks. Stay away from volatile stocks. Now I'm giving you my suggestions on how you should deal in the market. Whenever you put money in the stocks, it is very important that you understand the business model, and you need to look at things not just from micro angle. You have to consider macroeconomic factors as well, because there are things happening at global level which are going to impact the businesses of some of the Indian stocks, and accordingly you need to stay away from such stocks. Like I already gave you example, IT sector is not expected to do really good. Yes, if you ask me, is Infosys a good buy at 700 odd levels? Maybe it is a good buy, but then will it perform in next 3 months or 6 months? We're not very sure about it. Maybe not. Maybe it can, but probability is very, very bleak. So what you need to do is you need to look at the business models, especially for companies like which are dealing in pharma sector, companies which are dealing in agricultural sector. Probably these companies will have an edge as compared to other companies, and you need to consider business model as a whole before you decide which company stocks you're going to buy. Is it a good time to invest in markets? I feel yes, it's a great time to invest in markets, because still there are plenty of stocks out there which can be purchased as they are trading at very low PE values, and this shows that there are always investment opportunities in the market, no denial about it. But if you feel all this is very complex for you, and you don't have the patience to do the research, going in depth into it, it's better that you don't directly invest in market. Either you can avoid investing in market, or in that case you can take services of InvestorWise, where we are giving you a one-to-one service. Whatever I say, we do a lot of research Every day, our team is spending 5 to 7 hours of time just listening to the news and working out data, doing a lot of number crunching, and then deciding which stocks have to be purchased. You would have probably seen InvestorWise page how we are digging into the stocks. There are a lot of stocks which people would not have even heard about, and we are making clients buy those stocks, and the stocks are giving 10, 15, 20% return in a day or two. So we need to understand not everything is everybody's cup of tea. If you feel you are capable of doing it, definitely do it. But if you feel your money is at stake, if you're taking reckless decisions, it's better to hand over your money to the experts and let them do the job. I have told this earlier, I'm repeating it. The biggest advantage you get when you take advisory services of KP Advisory is that we are giving you services on one-to-one basis at very compelling and jaw-dropping prices. A lot of clients come back to me saying that we can't even believe that at such a small nominal fee you are giving us services on one-to-one basis. But then I feel that is my USP, and that has given me an edge in the market in last 3, 4, 5 years, and we plan to continue this way. We can only get better with a lot of feedbacks and suggestions coming in from your side. We only plan to get better, not complacent at any point of time. And it's very important in this kind of a market where markets are so volatile. The first thing you need to do is plan to preserve your capital. That is very important, and then start generating return on it. Both things are very important, guys. You need to consider both of them. You can't try and make return of 50% with exposing 100% of your capital. So at the end of the day, either 100 becomes 150 or 100 becomes 0. We don't like that kind of strategies. We have to play the game safe in a way that, okay, we make moderate returns, 20-25%, but our capital is safe. And for that, a lot of research has to be done, a lot of thinking has to be done, and a lot of factors globally have to be considered before you take any investment decisions. I hope the video is useful, guys. If you like it, leave a thumbs up. And if you have any suggestions, like if you want me to cover more topics, you can let me know. I got a lot of questions. I got hundreds of messages asking me what is probably the reason why stocks are doing so well in India when overall sentiments are negative. I thought, okay, why not make a video on this? And if you want me to cover any other topics, do let me know. I'll try my level best to come up with the quality content. Okay, till we meet again, guys. Bye bye. Stay safe, stay bullish. Cheers. God bless all of you. Thank you, guys.